Getting these divergences on the RSI, on the awesome oscillator, on the MACD, and again, we're at major resistance levels in the daily and the weekly time frame. The S&P again, stop the 20 period, turn back up. We're forming this divergence. Once it's done, we're going to take out the 2000, or we're going to take out the May trend line that's been acting as support, take out the 50, and likely head towards the 200 period. Maybe reach it, maybe overthrow it, but head towards it. We'll be watching the Fibonacci retracements once we see a reversal of conditions here in the daily time frame. S&P daily here, back doing the same thing, again getting the same kind of candlestick. So again, if we see the divergence is complete here on the awesome oscillator, on the MACD, on the RSI, then we'll be watching the 50 period. We'll be watching to see if we get a bearish reversal of conditions, and then we'll be watching for a move towards our 200 period moving averages. Keep watching the VIX because it's holding above the 50 period moving average. When you're above the 50 period moving average, that's a green line right here. Bad things happen on the S&P 500. Right now we're going higher on the S&P. The VIX is not moving to a new low, so there is a discrepancy. We had a hollow red candlestick mark a bottom, at least so far here, with the higher low. And that's the same thing we had happen, a hollow red candlestick mark a higher low for the bottom right before we saw it explode higher. Now the MACD is still in positive territory, and it's still positive. And it turned positive. We had a breakout of the bullish falling wedge, and we pull back, drop below the 50. Now we're back above the 50, and we back tested. So again, if we see a surge in volatility, we could see, because volatility is very, very low right now, and the bands are super tight, saying something big is going to happen. So far, it hasn't. We've just seen the volatility here over the summer months, and a little bit there with our recent pullback, and not much has happened. But yet, again, this is just building like a pressure cooker and about to just explode. And when it happens, you're going to see a pretty violent move when it does happen. But the MACD is positive, and you're above the 50 period moving average. This is a recipe for volatility for the S&P. And you can see that when the MACD got in positive territory last time and remained there, you had the surge in volatility, and S&P ended up dropping 21% there earlier in the year from the February high. Just want to talk quickly about the last government shutdown. It went about 35 days from just before Christmas on into January. Initially, we got a little bit of selling with the government shutdown kicking off there, but then we bottomed out and began to rally. And the Fed is what was going on back then. Is the Fed was doing a rate-raising campaign, the weakest one in history, by the way, but the market was throwing a fit. Concerns about the government shutdown and concerns about the Fed continuing their rate-raising campaign, and the market ended up dropping 20% in 2018. Now, Bitcoin did it a little bit different. It bottomed ahead, and you could see the Bitcoin 2018 chart in my last Bitcoin video. I'll link it at the end of this video from earlier today. Bitcoin went higher with the Fed, pausing their rate-raising campaign. But then it got a pop and a drop. Then it dropped 20%, and we saw the market get a little drop, and then it got the pop, already selling off into ahead of the shutdown, and then we got the Fed doing that. We still went a little bit lower. The Fed meeting was December 17th, I think, in 2018. We still went a little bit lower after the Fed, and we bottomed out at the very beginning of the shutdown. Now, what's different is we were selling off into the beginning of the shutdown. Here, we've been rising into the beginning of the shutdown. And what could be different is what Trump's about to do. It looks like he's going to do Doge 2.0 in shrinking the government. And the layoffs and the firing in an already fragile labor market. Does Wall Street show concerns about that, or about consumer spending? That's the question. I don't expect the government shutdown is going to go on for more than just a couple of weeks, but the president can permanently eliminate agencies and fire people. And we could see a great downsizing of the government, and that's what the CBO, the head of the CBO, is saying is going to happen. That's what Trump's saying is going to happen. I think it's probably going to happen. How does Wall Street respond to that? I don't know. It's food for thought because, again, we already have that fragile labor market. We've already seen now job losses in the month of June with the dramatic revisions downward. So we'll be watching. We've got weak reports. We're supposed to get one this Friday, but the government shut down. CNBC saying we're not going to get it. We'll see what happens. But when the government reopens, we're eventually going to get that report, or maybe we get it anyways. Who knows? If it comes in better than expected, then again, the rate cuts could be taken off the table. The one's penciled in for the rest of the year here. But if we end up getting a very, very weak jobs report like we did with the ADP report, the market could still sell off on concerns about recession. So just things to think about. Whether we get that jobs report Friday or not, and then the CPI data really depends on how long the government stays shut down. So Bitcoin was rebounding, and rallying of the government shutdown and continued to pop higher. The stock market was going the other direction. So we'll see what happens here, because again, we've rallied into a government shutdown. Here we had a sell-off into a government shutdown. A little bit different, but this is the last government shutdown that we had, and that ended up giving us a positive increase during the shutdown, but only after a dramatic drop going, with the next leg down here after this leg down in 2018. So do keep that in mind, and Fed could be a factor as well. Just food for thought here. And with the government shutdown, sometimes the markets shrug them off, other times negative reaction to it. Now, because we're initially rallying at the beginning of the government shutdown and rallying into it with the S&P, could we see the opposite happen to what happened here, that we were selling off into the government shutdown, the complete opposite? Just something I'm going to be paying attention to as we're at major resistance weekly time frame and getting those 9-count sell signals on the S&P and NASDAQ in the weekly time frame. Right now, in contrast, we have rallied into the beginning of the government shutdown. Excuse me, a little frog in my throat there. Rallied into the beginning of the government shutdown, the complete opposite to what we did in 2018, the last government shutdown there in late 2018 that went on into early 2019. We were selling off into the government shutdown, concerns about the Fed continuing their rate-raising campaign, and then the Fed caved, ended their rate-raising campaign. That really gave the markets a bottom. Shortly after the Fed did that, the market bottomed. But just some things to be aware of. Again, if you want to see the 2018 nearly 20% drop on Bitcoin from the same time frame from the government shutdown, again, I'll link that video at the end of this one. It's pretty interesting. So again, right now the market's shrugging this off. We're about to get Trump, though, meeting with the director of the Office of Management and Budget. And again, they're going to likely go in there and start slashing government agencies, and they can permanently do it with this government shutdown and probably do a Doge 2.0. Dramatically shrinking the government. And again, if they do, huge layoffs or firings, layoffs potentially leading to being fired if they start just abolishing some of these agencies, some of these programs, then again, how does Wall Street respond to that? I don't know. The government does need to reduce its spending because it's spending $7 trillion. After we had the pandemic, the government raised the spending by 40% a year. And we're spending $7 trillion a year. The 40% never went down. So we're headed on a path towards bankruptcy. There could be concerns about the fragile labor market with that and consumer spending if Trump does this. There could be a negative reaction to it. Just warning you. I don't know. Maybe there's no reaction to it. Maybe nothing becomes of it. But I'm just telling you, this is something I'm paying attention to, because if Trump does do Doge 2.0, dramatically shrinking down the government, does Wall Street have any concerns about that as far as consumer spending, as far as the labor market? So we'll see what happens. I don't know. I don't have the answer to that. It is something that I am paying attention to. The question is, do we get the volatility with the government shutdown or what Trump's about to do? I think that this is something worth paying attention to. About it, the Dow was up 78 points. Watching the Dow very closely, it's got an 8 of a 9, could get a 9 bar next week in the weekly time frame. The S&P was flat. It was up 4 points. We're seeing record highs. Major resistance here. The Nasdaq was up 0.39%. The Russell was up 0.66%, and the VIX was up 2%. You better be paying attention to the VIX. It's holding above its 50-period moving average. When that happens, bad things start happening on the S&P 500. We also have the Treasury Secretary, Scott Bessent, saying that the GDP could take a hit from the government shutdown. There's things to be paying attention to. The government shutdown ensure that we get another cut out of the Fed, or is it short-lived and we, seeing economic data still improve? We just got that GDP that showed the fastest growth with GDP in 2 years. Now with the government being shut down, the Treasury Secretary warning that could impact the GDP going forward. Talked about the NASDAQ hitting this trend line. This is our linear scaling, and we're hitting, that's the upper boundary of the broadening formation. With our linear scaling, we're overthrowing this trend line just a little bit. With our log scaling, we're slamming right into it. We're just slightly under it with the log scaling. I think this is an important trend line because each time we've reached this level, you've turned down 16%, 26%, nearly, and I'm just rounding here. You've seen these significant sell-offs. That's forming the broadening formation that I've outlined here in red. And as we're slamming up into this trend line and slightly overthrowing it with their linear scaling, slightly underneath it with their log scaling, you're getting a 9-count sell signal in the weekly time frame. For the trend line, I'm using the linear scaling, and we're slightly overthrowing it, as you can see here. Do we end up being above it by the end of the week? We tried to go higher last week, and we ended up turning down off of it, getting slightly above it. But you're getting a 9-count sell signal, and you've got a 9-9 pattern, just like we have on the S&P 500. A 9-count marked the bottom. We had a 13-count mark the peak here, but it happened right after, went a little bit higher, and then we turned down. And again, we really went sideways there right before the February sell-off. We had dropped 26%. Here we got a 13.9, slammed into the trend line, and we dropped nearly 16%. You're likely going to see something significant happen here. And we'll be watching, horizontal support. We'll be watching the 200-period moving average. And again, are we completing the blow-off top right here, or do we pull back and get one more push higher? I still think we likely see a good fourth quarter. We're likely in that final phase of the blow-off top. Is this a final climax move? My guess is it's not. I think we're going to get one more be the final climax move of the final phase of the blow-off top. Just be aware of this because you're getting the 9 count on the S&P and on the NASDAQ here. The S&P rallied to new highs today, but it's still slamming right into this 2023 trend line. We've talked about this at great length and detail. Hit it last week. Previous week we hit it here, and we slammed into it. We got a candle of indecision. The market opened higher for the week, and we're slamming up into that blue trend line again, just slightly overthrowing this blue trend line, which is from the 2018 high. So you've got this steep resistance. I'll be watching to see what kind of candlestick we get. And does Trump make an announcement about firing people, downsizing, eliminating agencies, eliminating programs? And if we see something like that happen, how does Wall Street respond? Is there a negative reaction to it? I don't know. But you're at resistance right here. Could that be a catalyst? I don't know. And when the government does reopen, we'll be watching to see if we get the jobs report, assuming that we don't get it. As CNBC has reported, we're not going to get it with the government shutdown. So we'll see what happens once we do get it, since they're reporting that we're not going to get it. And maybe the CPI, depending on how long this shutdown goes, we'll see what happens. But again, watch this level carefully. You got a 9-9 signal. A 9-9 is a reversal pattern. A 9 gave us the bottom here. Bar 8 was the low of the bar. Here you had a 9. We got a trend extension. Now you got a 9-9 on the S&P weekly chart. And now here with the rally today, we're slamming right up into that trend line again, just like we did last week. What kind of candlestick do we get by the end of the week? What that looks like on the daily chart is that, again, we're slamming up into the trend line there. It looks like on the daily chart we're just below it, but we continue to bounce off the trend line from the May low. And again, we keep hitting it and bouncing off of it. When that trend line breaks, that's when the sell-off is going to happen. This is now touch number 6, I think, that we've hit. 1, 2, 3, 4, 5, and now 6. So again, when this trend line breaks, that's when the sell-off is going to happen. And we have this rising wedge with that lower boundary from the 2018 low and up into here, and we're just seeing this tight trading range. So again, going to be watching if we do start to turn. Does this trend line from the 2018 from the May low, pardon me, does it break? If it does, we're looking at the 66. Mid to low 6,600 area, depending on when we were to come into contact with it. I told you to be watching the upper boundary of our broadening formation with the log scaling. With the linear, we're overthrowing it a little bit there on the weekly chart. We're overthrowing the broadening formation with the linear scaling, but with the log scaling, you're slamming right into it. And this is our broadening formation going back to 2024, to the July sell-off in 2024. We hit it again there in late 2024 in December, and then we had the slightly higher high in February of 2025, and we had the nearly 26% sell-off. Every time we've hit this trend line, you've had a dramatic drop. Over here, nearly 16%. Over here, and I'm just rounding, over here, nearly 26%. What do we get here? And again, if we get just this, that takes us back beyond here, to our 200 period moving average here in the daily time frame. Here I've marked a correction that may find support above it. We may go deeper than that. We may go less than that, but looking for some kind of sell-off. I'm just telling you, each time we've hit this, you've had a pretty dramatic sell-off. You have a massive broadening formation. And my guess is that you're going to see a sell-off and you're still going to go make new highs. We're in the final phase of the blow-off top that began back in April. The blow-off top. This is why we're getting such a dramatic push higher. It is the blow-off top. But this peak at this trend line does not complete a top, and we sell off and we go up and we try to rally some more and can make new highs. Will likely be the final climax rally in the fourth quarter, which I think is likely going to be the case. It may drag out on into the first quarter of 2026 because it just come up to highs and remained elevated, sold off, rebounded back up, but just have remained elevated. We are not following the seasonality anymore at all. The S&P 500, longer-term seasonality suggested a sell-off rounding early September, going back about 100 years. The shorter-term seasonality over the last 20 years, a post-election seasonality cycle suggested that we would get a mid-September high. We didn't get either one. So the seasonality does not always play out, but we're not following the seasonality. Maybe we get back on track with it later, but right now we're not following that seasonality, either one of them, the longer term and the shorter term seasonalities. As we're coming up to this trend line right here, we're slamming up into it today. I told you to be watching that trend line. We hit it, and we're getting the 9 count in the weekly time frame. But just bring it up a little bit closer here. You can see again we're slamming right into this level. We're just a fraction underneath it, and we got a black candlestick today on the Nasdaq. We're just a fraction underneath it from the July peak and this December peak over here in 2024. It came up to just under that trend line, just by a fraction there, and you got a possible hanging man candlestick on the Nasdaq. So what becomes of that hanging? It is a black candlestick. The one over here is a black candlestick. Black candlesticks don't always play out. You get some here that don't play out. What it means is we opened higher at the open, but then we closed lower. You get the black candlestick, but we're still holding above the previous day's close. So again, you got a black candlestick directly under that trend line right here, and it might have moved a little bit because I'm bringing it up close, but just slightly under that trend line, you get this hanging man, potential hanging man candlestick. A candlestick means nothing until it's confirmed, but if we close tomorrow below today's low, start getting a dramatic sell-off. Then again, this broadening formation, we could come down, take out the 50 period moving average, moving towards the 200 period moving average and probably see a pretty dramatic drop. Will it be Trump that triggers that with these potential mass firings and downsizing of the government and eliminating government agencies? I don't know. Some other catalyst? Nevertheless, you got a possible hanging man candlestick on the NASDAQ today. And as we're getting that hanging man candlestick, NASDAQ 100 was up 0.37%, didn't close at the highs, but again, we moved to a new high, getting a new closing high, but we got the hanging man candlestick and you got these divergences. Again, I talked about the sell signal over here that if we go up and make a new high, you'll form a divergence in this most recent price action with the 9 count we're getting in the weekly time frame. Or if we confirm a lower high, you got to get a lower low to validate a turn. And again, we're getting the higher high, we're getting the divergence. You can see it up here on the stochastic here on the NASDAQ daily chart. And again, our MACD never rolled over like the MACD on the S&P, and the MACD on the S&P is now turned back up, and it's forming a divergence. You're even getting one here, though, on the MACD itself. Even though it didn't roll over, you're still getting a lower high on the MACD line, even though it never crossed below the signal line. So again, going to be watching to see if we start getting a dramatic sell-off like Bitcoin did surrounding the last time we closed the government. Bitcoin had rallied into the Fed cut and rallied into the Fed pausing in 2018 and got a 20% drop after a pop and a drop there, whereas we have the stock market rallying into the start of the government shutdown, whereas last time it sold off into the government shutdown. So just something to consider. We very well could see a dramatic drop surrounding the government shutdown if Wall Street has a negative reaction to maybe what Trump does with the downsizing of government, what I've been calling Doge 2.0. I said Doge is a Department of Government, the Department of Government Efficiency. And Trump can make a lot of the Doge cuts permanent right now, and we'll be watching to see if he does do that, which I think he's going to in the next couple of days here, maybe before the weekends here, maybe tomorrow or on into next week or something over the weekend. How does Wall Street respond to that? Divergence likely now wrapping up here with a possible hanging man candlestick on the NASDAQ. We got a similar candlestick on the S&P. Again, it moved to new heights, forming this divergence in the most recent price action, but we got multiple points of divergence on the S&P 500, and we've got a divergence, a triple divergence there on the stochastic. If it starts rolling over tomorrow, we could possibly try to confirm these little hanging man candlesticks that we got with black candlesticks on both the NASDAQ and the S&P. And again, sometimes black candlesticks are associated with tops. Not always, but often they are. Again, we even got the divergence in the most recent price action here on the MACD. It had rolled over, it turned back up, but it's now making a new high. It's diverging with the S&P 500. So again, the multiple point divergence is likely to lead to a reversal, likely to come back and start moving to take out the 50 period moving average, start moving back towards the 100 period, and eventually moving back in all likelihood towards the 200 period moving average. Zoom out, you can see it a little bit better. Again, we're going up and we're slamming up into this trend line. We're just slightly below that trend line, but we got that black candlestick just slightly below the trend line from the 2023 low. But you still have this multiple point divergence, and again, a divergence on the MACD in the most recent price action there. Again, you're likely going to move back, take out the 50, move back towards the cloud. If we go back to the high in February, you're moving back towards 6150. If you take it out, our 200 period here is in the 6,000 area. And if we start dropping back down towards those levels, we can move towards some Fibonacci retracement levels that I've talked about previously. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel today. Follow the link below to take you to a secured site and you can donate any amount you want or make it a recurring donation. If you do that, I thank you. I told you we had a bearish signal back over here on May 23rd, slamming into resistance. That gave us the doji. We sold off. It gave us a doji candlestick on the weekly chart. Now we've come back, and I told you to be watching. Did we go back up and form a divergence on the RSI in the daily time frame? We get a lower high and a lower low here with that signal. And again, I told you we could get back-to-back bearish reversal signals if we form the divergence on the RSI. So I'm watching this closely. Bullish signal came with the September run-up. The bearish signal gave us this pullback. We got this new bullish signal. I'm watching now. Do we get a warning of a top here once the divergence completes and begins to play out? You got a bearish hanging man today here on the S&P. Something I'm watching. See if the candlestick is confirmed tomorrow or not. Candlesticks are meaningless unless they're confirmed. Same thing. We got a bearish signal on the 23rd for NASDAQ. We sold off down again to those 20-period moving averages. We bounced. We're moving back up. Now you get a hanging man candlestick into the upper boundary of the broadening formation. I'll be watching to see if another bearish topping signal forms like we got back over here on the 23rd. Got that bottoming signal in early September. Could we get back-to-back topping signals here? And if we do, then we need to see it validated with the swing trend signals turning bearish. My signals still remain bullish. Watching today's hanging man candlesticks, NASDAQ slamming right into the boundary of the broadening formation. It's just below it on the log scaling, moving above it, overthrowing it on the linear scaling.